Let's start this conversation today looking at banking on Broad Street and the power that the banking sector has been able to put behind the power sector. Ugochukwu Nwawodo is the Group Chief Finance Officer at UBA Group and is live here to us in the studios. Good morning.
Good morning.
Thank you very much for your time. We appreciate that. Thank you guys for helping us in the power sector. At least we know we're getting away from a total public sector to a private sector. So these are private power firms and the banks are also private, so you guys are coming together. How much have you been able to put at the back of these power companies?
The banking sector has invested a lot in the power sector by way of lending. UBA particularly has also invested significantly by way of lending to the power sector. You will agree with me that the power sector is a pivotal sector that will jumpstart a lot of other sectors in the economy. It supports the entire economy in different ways. The SMEs, the large corporates, even we as bankers. Our cost of doing business.
Too.
Oh, the cost of doing business is humongous, and the significant chunk of this is power related. You know, you generate your own power and all of that. So it's important that everybody rallies around the power sector and ensure that there's ample support for the power sector. So it's not surprising that the banking sector has put a lot of power, a lot of lending to this particular sector to ensure that things work.
Okay, let's make this a little bit personal. You have a very huge building on Broad Street around Akongo, and this huge building, how do you power it on a daily basis?
Oh, we have very heavy CAT generators, about 4 of them, right in front of UBA House, and they are there all, and they generate power regularly. Once there's power outage, within a matter of a second, we switch on to this alternative source of power. And so it's very important that we have good support for the power sector. Huge amount of money is spent generating power by various businesses. And it's not just the cost of the generators, but you're talking about the running cost of diesel, and cost of maintenance of the generators and replacement cost, etc.
You are the Chief Finance Officer, so you see the numbers.
I see the numbers, and I can tell it hurts.
You see the numbers. You know how much goes into those diesel engines.
It's a lot of money. I can assure you. And this is just typical. This is what you have with various businesses. A lot of businesses are packed up in Nigeria as a result of high cost of doing business, largely because they have to generate their own power. You must have compared notes with your colleagues in other banks. Sure.
Downtown. So, what's the mood amongst you bankers when it comes to these problems of the power insufficiency and what you're spending out of your earnings? Because you need to declare shareholders' value, but at the same time, before you can deliver shareholders' value, something has to go into the powering your daily operations, because you can't even go off on weekends, nor public holidays. Yeah,
I mean, discussing with peers, you find most people also have similar costs of generating power, and people would like to see significant improvement in the power coming from the national grid, and everybody would like to see that change and help it to save that cost that you ordinarily have spent on power.
What's the average cost?
Bottom line.
What's the average cost?
It's a whole lot of money. I think I'll talk about it in percentage terms. I think the overall cost of power for our businesses across the network will be somewhere around 7% of our total cost of operations, and that is material.
I wish I can translate that to Naira and I'll have an idea how much that is, because 7%. Was that significant? Well, you said that's significant when you look at your operating expenses.
Yeah, it is significant. Anything that is more than 5% is significant. I think it is significant. You're talking in excess of 6, 7, 8 billion. Certainly.
Now, look at your support for the power sector. Tell us about your experience. Have you started getting some returns?
Oh, certainly. The power assets have been doing quite well. We do recognize that there are some challenges in that sector. There are some teething problems, but the sector has been doing very well. The loans to that sector has so far been meeting their obligations, and we're quite happy we did support that sector.
In terms of outlook, how did you see this sector short-term, medium-term, long-term, in terms of what the return would look like? Of course, you folks also supported the telecom sector for the GSM revolution, if you want to put it that way. Now we're going to the second phase of that, of GSM revolution with the ICT boom in the country. So that looks like a very sumptuous business for you bankers. Now for the power sector, what does it look like from where you stand at the moment, looking far ahead?
I think the future is very bright for that sector. The outlook is very good. Once the teething problems are all over, I think you're going to see significant improvement in the returns from that sector. Today, we've seen very good level of generation. Today, we're talking about approximately 4,500 megawatts, and that's material. So you can only expect to see improvements by way of returns to shareholders who've invested in that sector, as well as to the lenders that have supported the sector. I think the outlook is good, I would say, overall.
That sector still needs a lot of money.
Sure.
So would you be willing to lend more money?
Yes, we will be willing to continue to support the sector. For us, if you look at our power assets, they've been carefully selected to ensure that to ensure that we have very good performance by way of credit performance on these facilities, and therefore we will continue applying the same approach. We will continue to support the sector, being very careful on the obligors that we expose ourselves to in this sector. What's really important for the bank is to make sure that you have the right obligor, that your credits, the credit issues are well taken care of. Once that is fine, the sector will do well. I mean, the facilities you grant in that sector will do well. So we've carefully selected our obligors. We've selected obligors that have even alternative sources of cash flows, very cash rich in other businesses that they have. So it's not they are not monoline power assets, really. Most of the companies that we've lent to. So they are businesses that will always do well. And once that happens, you're sure that the assets will perform very well.
In terms of where you lean, in terms of exposure, are they more of the wholesale side or the retail side? Because we've seen a few banks who are a little bit to the retail side. How do you balance this?
I'll say that it's a mix. If you look at our asset portfolio, UBA focuses more on the corporate end of the customer segment, or the customer
of the power segment.
Of the power segment. Are you talking about power segment?
Yes, the power. Yes, power.
Power segment is largely corporate. Largely corporate.
And you're looking at something very significant there in terms of your. Maybe you support power plants and discos, and do you support any of the discos, for example?
Yes, we do.
And
our total power sector exposure is in excess of 8%.
Of your total loan book?
Yes.
That's quite significant.
Yeah, that's significant.
Why do you think some of your colleagues couldn't turn in a good report?
I'll prefer to talk about
that question really means, in other words, what are the issues in the banking sector in the first half of 2015?
Okay, so basically the sector has seen a couple of headwinds. Now, how you manage and deal with the whole of that is a different issue, and different banks will deal with that differently. For instance, you've seen certain pressures that will have impacted earnings in different ways. You've seen pressures around, for instance, COT income, regulations around reductions on COT income. You've seen liquidity crunch in the markets, which has an impact on cost of funding in the market during the period. Obviously, due to fiscal policies from the CBN around CRR requirements. You've also seen also during the period we've seen some impacts of fiscal policies as well, monetary policies on FX trading income, and I think these are industry-wide issues. So the industry, has been through quite a bit, and there's been certain developments that have impacted earnings in the industry. However, these have been managed in different ways by different banks.
How did you manage to survive?
And I guess that's speaking to the facts behind the figures that we recorded. We recorded a decent 167 billion in gross earnings, which came through to about 32 billion in profit after tax. And this is largely on the back of, I would say there are three key drivers of this. The first would be we had about 9% growth in the loan book, and also a very good, effective repricing strategy, which saw the total gross earnings up by about 21% relative to the same period of last year. The second factor is the fact that we've recorded new milestones in a number of our African subsidiaries, and the ones that weren't contributing as well before have begun, to contribute much more into the overall kitty. Africa as a whole, when I say Africa as a whole, I mean our businesses out of Nigeria contributed about 23% to earnings. Our subsidiaries about 23% to earnings, and that was very good. It supported the earnings and the results you saw released yesterday. A third factor, which I think is also very critical, is the fact that our improved service quality provided impetus for increased transactional banking volumes across all our offerings. Offerings like the trade services, like electronic banking solutions and platforms, as well as the remittance businesses.
I just want to ask a few questions specifically. How were you able to keep loan loss provisions down 24% year on year?
You'll agree with me, both in that loan loss provisions, or impairment charge as we call it, is a factor of the quality of the risk asset portfolio. UBA's risk asset portfolio is quite good. NPL ratio, non-performing loan ratio, stood at about 1.8%, which I will say should be one of the best in the industry today. And this is largely on the back of our cautious approach to lending, conservative approach to lending, as well as the effective risk management procedures that we've put in place. Our cost of risk came down to as low as just 0.6%.